So this one is very interesting. This is the $50,000 Ethereum price prediction from VanEck, a major financial institution. So let's have a look here at what VanEck has to say. The bullish scenario for Ethereum. VanEck's valuation model is based on several key building blocks. So this is not the sort of pie-in-the-sky price target that's so commonly promoted by super bullish crypto enthusiasts. Guilty. That's probably me. Anyway, the first building block is Ethereum's revenue model, which relies primarily on transaction fees. The second building block is Ethereum's coin supply, which is actually decreasing over time. We've talked about this, of course, many times here on the channel. These bullish factors that are all coming together for Ethereum, basically, bull mega juice, if you will, increasing demand, all the ETH going into the staking supply, the burn, and all these different things, increased layer 2 activity, et cetera, et cetera. So they go on. The third building block is what VanEck calls the broad market capture strategy of Ethereum. Basically, this means that Ethereum is involved in just about everything blockchain related these days. It's true. They have the first mover advantage. They have a big moat around them as well. So I can understand where such a prediction come from. This is by 2030, by the way. So 50K by 2030. So they go into a few different things here, talking about layer 2s, talking about, again, those factors we just talked about. Although the Motley Fool guys, they have a thought on whether this is realistic or not. Given all the above, VanEck appears to be too aggressive in its growth assumptions for Ethereum. For example, VanEck currently projects revenue for the category of metaverse, social, and gaming to balloon by 50x in its bull case scenario. Counting on massive growth in this category seems flawed, given that the metaverse investment thesis has completely imploded over the past 18 months. Oh, wait until the metaverse comes back. It will at some point, probably, we hope. We hope for our metaverse coins that the metaverse narrative comes back. It will. It's just a matter of time. The metaverse is one of those investment theses that was ahead of its time, right? We all got very excited about our metaverse coins, our metaverse stocks, whatever it might be. And then we had the hard realization that, well, it's going to be a while before any of this stuff actually materializes in a meaningful way. And then, of course, the bear market came, which makes you question all of your assumptions. And not taking into account all potential for layer 1 rivals to chip away at the dominance seems short-sighted to me. It's interesting that Ethereum has managed to maintain such a strong stranglehold on total value locked in the market, on developers, right? The Ethereum developer interest has remained very, very steady over time. And just so much money and mind power stays inside of Ethereum. And they point out here, plus it's important to keep in mind regulatory risk. Well, if there's going to be regulatory risk for Ethereum, then there's regulatory risk for every single layer 1. In fact, a lot of other layer 1s have already been named as a regulatory risk by the SEC, whether that be Polygon or Cardano, Solana, and others have actually been specifically called out in some of the SEC's lawsuits, with them arguing that these are actually securities, although they have not said that about Ethereum. In fact, they've said the opposite about Ethereum in the past. And when asked recently about it, the SEC chair, Gary Gensler, didn't want to say about that. That was such a crazy scene with him just being asked directly, is Ethereum a security? He's like, okay, Gary. Simply put, a $50,000 price forecast just seems too aggressive. Remember, the all-time high for Ethereum is under $5,000. And Ethereum has already shown real weakness this year when it comes to pushing past the $2,000 mark. I think that this analyst over at the Motley Fool is perhaps being a bit short-sighted. I know we're still in a bit of a bearish market scenario. And whether 50K is the number or not, I mean, trying to make a price prediction 7 years into the future, 6.5 years, okay. That's a long time away. That's a long, long time away, right? And if we go by 4-year cycles, so we have our next all-time highs in 2025, followed by 2029. So yeah, by 2030, we'll see how it goes, right? But we could see such crazy price forecasts, particularly when it comes down to the burning model for Ethereum, right? Because when you start realizing that we're seeing Ethereum going down in supply by 1 or 2% a year, and it might speed up dramatically during the next bull market cycle, plus, of course, massive Ethereum staking, we do have the right cocktail of economic factors for Ethereum to potentially bring in some big price movements. And that 50K price, if we were to hit it, that would be like 5 minutes on one exchange. It's not like pricing it up to 50K and just stay there, right? That would be the absolute blow off top in my mind. But we'll see how it plays out. But let's revisit this in 6.5 years, I guess, and see who was right. I asked you guys over on Twitter as well. VanEck thinks Ethereum can hit 50K by 2030. Do you agree? 34.7% of people said yes, indeedy do, Lark. 32.5% said no way. 15.8% praying that it does, and 16.9% say, I don't care. I am stacking sats. Who cares about Ethereum? So we shall see how that plays out. The crowd seems a bit divided between the yeses and the nos. And you know what? If Ethereum hits 50K or it tops out at 25K in 6.5 years, come on, man. That's still a 10x from the current prices. I can do a 10x in the next 6.5 years and be pretty happy about it. So I'll just leave that at that. Staked Ethereum now accounts for 20% of the total supply. The amount of Ethereum pledged to secure the network has grown significantly since withdrawals were enabled in April. It's pretty impressive. And actually, if we talk about the amount of Ethereum in the queue to get in, not staked yet, but in the queue to get in, it's more like 22% currently. So it has been slowing down a little bit recently, but we're still seeing Ethereum pile into the staking contract, and we're seeing almost no Ethereum leaving the contract, which is pretty impressive when you think about it. And it's very interesting for me to think too about the reality of this, right? Of what that means for the next cycle, and particularly when it comes to Ethereum liquid staking, Ethereum in particular. The guys over at the Defiant News, Ethereum reached the milestone over 20% of validators, 20% all circling ETH, now staked by 745,000 validators. One concern about centralization persists as Lido Finance counts for more than 30% of the total of staked Ethereum. Now, Lido Finance is not just one organization. There are many staking providers, all contributing to one protocol. So there's that to keep in mind. But I do wonder if we see next cycle, okay, look, next cycle, it's going to be, Ethereum gets up to $12, $13, $14,000, let's say as a number, right? And when that peak comes in, we're going to start seeing a lot of people rushing for the exits, except that with the current amount of staked Ethereum, it was like a 2-year exit queue to get all that Ethereum out. And some people are going to be staking for multiple cycles. They're not going to withdraw their money, but some people will. Some people will withdraw their money. And let's say that 5% of that Ethereum starts rushing for the exits, or people try to swap out their Lido staked Ethereum, their Rocket Pool staked Ethereum, whatever, and they're so keen to get out that it actually pushes these off peg again. And we could see a lot of liquidations and stuff start to cascade in that situation. So I could see that kind of scenario playing out either at the peak or shortly thereafter the peak as people start to try and get their money moving out of staked Ethereum and into cash. So we'll see how that plays out. By the way, if you're not signed up for the Wealth Mastery newsletter yet, you gotta get signed up. It is the best free newsletter in the cryptocurrency space. Every single issue, the latest news happening in crypto. We talk about altcoins. We've got DeFi news, NFT news, airdrops, and much, much more. So you got to check it out. There's a link where you can get signed up for free and join our 80,000 weekly readers. So go ahead and check it out. Now, another thing I want to talk about when it comes to Ethereum is the layer 2 scene. You see, VanEck points this out as well. And they're very right to point out the layer 2 scene, because layer 2 scene is super, super big for Ethereum. We've seen Arbitrum go absolutely crazy, right? We've seen Optimism drag in a lot of money, a lot of users. We're seeing like Arbitrum and Optimism together doing more daily transactions than Ethereum. Sometimes Arbitrum itself is doing more daily transactions than Ethereum. So there's definitely a lot of layer 2 interest because you can use all the same great protocols, use your ETH as gas fees, all that kind of stuff. And we're seeing a major layer 2 war about to go on, for lack of a better term, perhaps. Well, we already have Optimism and Arbitrum and Metis and others, right? Loopring and so on and so forth. We have a bunch of really well-funded, really big layer 2 protocols coming out, right? We have ZK Sync and We have Mantle, which is coming up very, very soon. So they're supported by BYBIT, and BYBIT's planning to invest a maximum of 200,000 Ethereum into it, which is a massive amount of money. So we're going to see huge amounts of cash flowing into the Mantle network. It could be the place to be honest, when it comes down to the layer 2 scene in the coming months. So definitely watch out for the Mantle launch and those early movers in the Mantle ecosystem, and those early dexes and those early money protocols, because those could be a big amount of gains potential, right? So definitely watch out for this to launch, because look, BYBIT's got a lot of money, right? BYBIT's very well funded. Their DAO is very well funded, and they're moving the whole thing over into the Mantle layer 2 network to try and absolutely just push that ecosystem to the max. So I would not fade that personally. We also see MetaMask developer consensus bringing in layer 2 blockchain Linea to the Ethereum mainnet. That's going to start from next week. So another very well funded. I think these guys raised like $700 million, something like that. Absolute crazy amounts of money that they raised for this layer 2 network. Once again, we're going to see all these early mover protocols in this ecosystem potentially having the ability to bring in some pretty gains for early investors. So it's an area to watch out for, right? It's an area to watch out for. Also, something to keep an eye out for is, of course, real world assets. And this is one of the things VanEck talks about here, is the future potential of Ethereum to not only broaden its current scope of use cases, but also to bring in new use cases, things like security as a service or the tokenization of real world assets on chain. And DeFi Dad says, imagine working to undermine an industry that has developed better tech to buy US Treasury bills. When does Goldman Gary get fired? Of course, the SEC chief he's referring to there. Crypto investors now effectively lend $614 million to the US government via tokenized treasury products. Pretty crazy, right? We're seeing a massive amount of bonds and things like this starting to come on chain. We're seeing banks in Europe starting to bring out bonds and things on chain. And as BlackRock's CEO Larry Fink has talked about, he sees the tokenization of assets and securities as the way forward. Now, he says that's what Bitcoin is all about. It could revolutionize finance once again. And maybe we do see like BlackRock bring out a layer 2 for Bitcoin where you can trade stocks. That would be like crazy stuff, right? However, what we're seeing in reality, a lot of the early pilots for this kind of stuff, it's all happening on Ethereum. Almost all of it's happening on Ethereum, we should say. Larry goes on to say, I really think the underlying technology is brilliant. Blockchain will help you to speed up the transaction processes. Blockchain will help you to identify. Let's be clear. If you have pure blockchain and you know who the buyers and the sellers are, we don't need a custodian anymore. The whole process of finance and some intermediaries are broken. This is the world's largest asset manager saying that the future of tokenization, the future of equity markets, right? Bonds, stocks, real estate, all this kind of stuff. It's on the blockchain, baby. It's on the blockchain. My question is, when BlackRock Ethereum ETF? Because it's coming.